Hello and welcome to Chartbusters. We are coming to you live from the Motilal Oswal studio. Keep an eye out on the markets. Markets currently in the red. Mangalam, what's going on? The Nifty, the Sensex, the mid-cap index. It's a red start to the day ahead of Valentine's Day.
I think you said it, market likes red, Valentine color is red, and that's exactly why all the IT stocks are, behaving in the Valentine's mood. But let's see what happens from here on as well, because barring the IT sector, no other major problem for the market if you look at it. Earnings have been good as well. And speaking of earnings, let's speak about Indian hotels. A steady set of the third quarter numbers. Now remember, hospitality isn't an undiscovered space. It's more or less on the autopilot, and that's exactly what analysts expect as well. Puneet Chhatwal, the MD and CEO of Indian Hotels, joins in after 12% revenue growth in the company's consolidated performance, near 12% growth in the EBITDA. Thanks a lot, Puneet, for joining in. The third quarter obviously was assumed to be good. It is good. 15 straight quarters of record-breaking performance, and now that record itself sounds like a broken record because it's been spoken about so often. Having said all of this, every time the sector surprises us, the fourth quarter, no one was expecting 32 lakh rupees sort of rates coming by in the NCR because of the AI summit. So let's start with that, about MICE as a proportion of your sales and how the AI summit would hold you in the fourth quarter.
Good morning, Mangalam. Even if it sounds like a broken record, let's start getting used to it because the next quarters, I am quite confident will pan out the same way. Summits are very important, whether it's international delegations or summits, but 32 lakh for a Tata suite or a presidential suite is a far-fetched proposition. Let's not get carried away by reporting of one-off cases that might have happened for whatever reason, and God knows what all was included in the package. Definitely it's not from us. So it's not from us, and let's stick to responsible journalism. I think it's very important that we give a boost to the sector and not put it down on the national television.
Exactly. Thank you for saying that, because there were so many clickbaity words which were going around and all of that and stuff. I wanted it out straight out of your mouth as, the leader of India's largest hospitality company. What could the AI summit impact be on the average room rates of the region? Could it be 5-10% increase? What does this basically do to your Q4 business as compared to same time last year?
See, Mangalam, the AI summit is only 2 days of the 90 plus days Q4. So with the law of averages and mathematics, we need many more things to happen to continue our double-digit top-line growth. We have guided for 12 to 14%. Year to date, we are at 17%. I think Q4 is the second most important quarter after Q3. We are on a good track. We are on a good roll. We have added new businesses. Our pipeline remains strong. Our openings remain strong. And we remain confident of definitely, getting ahead of Q4 of the last 3 or 4 years.
All right. Hi, Mr. Chhatwal. When you're looking for responsible journalism, look no further. Always true to its name, CNBC-TV18.
Yes, with my two favorite people, I think I could take the liberty to request you on behalf of the sector to not propagate, wrong information.
All right. We take that on board and, Mangalam.
Cheers, Puneet. Thank you for calling us your favorite people. And we'll see you around. We'll still not ask you any lighter questions. We'll still push you for numbers. We'll still push you for margin guidance. We'll still push you from, all the, from the vantage point of all the stakeholders in your company.
I think Puneet had a smirk on his face. Because Mangalam said cheers. That's a bit of a switch, with the tea. But anyway, cheers sometime during this quarter, Puneet. Let's get back to the numbers then. How do you see ARRs as well as occupancy move? In this quarter, as well as getting into the next year, as you're indicating, and you've said it time and again, every time you appear post a quarterly result, your body language is extremely strong. So what are your expectations on this front?
I think the rates will continue to grow at around 10%. Now, whether it's 9 in the end or 11, that's your RevPAR growth, which is projected. which comes majority from rate and a portion of it from occupancy, because occupancies are at a very high level. But more importantly, February is not just summit driven. February this year has more wedding dates than January had. So I think that is a very important component of the total revenue in India. Accounts for almost 20% of the revenue coming from wedding, MICE, food and beverage segment. So I think all in all, we see the demand outpacing supply, not just in the current quarter, but in the next quarters to come. And the domestic front is very strong. Our hidden upside potential still remains the foreign tourist arrivals, which is not really moved from the pre-COVID levels. But that should move, because globally the movement of foreign tourists has started happening, and some destinations are very much ahead and others are following. So I think India will be one of those that follows in getting its fair share of increase in foreign tourist arrivals.
Take that point, Puneet. Just a bookkeeping question. What proportion of your revenue comes from MICE? And in that, how much of that is corporate events? How much of that is weddings?
From MICE, approximately 30% in the Taj branded properties, because these are the larger boxes or larger hotels which have the capacity, like the Taj Palace in Delhi, the host of AI Summit. The Taj brand gets approximately 30% of its revenue from weddings and MICE events.
Okay, all right. Mrs. Chatwal, what about margins? Have they peaked at this 33-35%, or is there more to go?
Well, it depends how one looks at it. 7-8 years ago, we were averaging 15-17. Today, we are getting, last year we reported 35. This quarter, we reported 39.1, which is marginally higher. And on the standalone business, is 48%. So in a capital-intensive and a labor-intensive business, we are very pleased with the margins. And these are despite the fact that we absorbed the growth of company-owned projects, the Ginger and Vivanta in Ekta Nagar, which have startup costs, as well as we are spending money on the opening of Frankfurt, which should open next month, middle of next month to end of next month. The date will get fixed very soon. And at the same time, all the money that has gone into due diligence, legal expenses, travel expenses for absorbing the inorganic growth that we had with Ank, Pride, Bridge, as well as Atmantan.
Right. We'll speak about this diversification at length sometime during the middle of the quarter, Puneet, when we get you once again. Just a final question from both Nigel and my end. You were speaking about Frankfurt, etc. I'm concerned a little about, what the US media is reporting about the Pierre. Their residents, etc. They're up in arms. They don't want the property to be sold, but reports suggest that maybe members of the Pierre board have reached a handshake agreement to sell the building, etc. Do you know of anything that's happening, and could that have any bearing on your management of the property?
As we speak now, Mangalam, there is, again, no substance in that news, and there will be none even when we end this quarter, or we are reporting Q4 results. Definitely the co-op owns the building. So very important clarification that is needed is we don't own the pier. We have a lease contract on the pier. And we are very pleased with the current financial year performance. Actually, December was the first month in the history of pier where it crossed 100 crores in revenue. And this year is the first time we are going to have a cash profit in pier. So we are very happy to be on the Fifth Avenue, and we'll do what it takes to keep the property and keep the flag, because that is, the pride of a brand like Taj, which builds that soft power of hotel in, Fifth Avenue in New York, or Buckingham Gate in London, or at the Business Bay in Dubai, etc., etc. That's what builds the brand power of the Taj brand.
All right, Mr. Chatwal, always a pleasure speaking to you. Maybe since you took us across the globe, next time around, maybe we'll do an interview in New York or Dubai or somewhere where...
At the pier, or maybe the Frankfurt property that opens next month. Let's see, whatever happens. Does that work?
We always say, we promise, we deliver. Now, you've said it on the national TV, Please join me in Frankfurt for the next reporting.
All right.
Cheers to that, and all the best for the quarter, Mr. Chatwal. You're going from strength to strength, and you're sounding very, very optimistic. Catch up soon, and thanks a lot for joining in.
Thank you for having me. Always a pleasure.
Well, time to slip into a short break. On the other side, we have Mr. Satish Pai. I had a chat with him. I'll tell you, what he said in that conversation. Stay tuned. Welcome back. Markets are under pressure. Hindalco has been reporting its numbers, both the India operations as well as Novelis over the last few days. I had a chat with the management, Mr. Satish Pai, the MD of Hindalco. Let's hear out what he had to say with regard to the India business, the Novelis business, and the debt plan as well.
Well, if you look at the last couple of months, the aluminium prices have been around $3,000 plus minus $100. So I think that, we are well into the middle of quarter four, and it's fair to say that these levels of pricing of aluminium are going to continue. I think you have a tight supply-demand situation, and then when you look at the investor sentiment, commodities are now very much in favor. So I think as a combination of this aluminium, copper, and most of the commodities seem to be having a very strong pricing support in the coming months.
Okay, all right. Let's focus a little bit on the business and the aluminium business. What is the mix likely to be? Because I'm just looking at the export contribution, export domestic mix. Domestic sales, that turned around a little bit. So how do you see the mix stabilizing in the coming quarters?
So I think that over the next year, till our new upstream capacities come in, we're going to be more than 70% domestic and only about 30% exports. Why? Because our value-added downstream capacities have gone up after we have commissioned our new plants in Odisha for rolling and extrusion. And the Indian market demand is very strong. So I think that, the auto sector has bounced back after GST 2.0. We're seeing electronic goods manufacturing picking up. So I think that the market demand in India for aluminium and copper is extremely strong.
Okay. Even though you have a hedging strategy in place, 60% of your volumes in quarter four will be at lower prices, 2,800 ballpark. And in the next year as well, 20% of your aluminum will be hedged at a little bit of a lower rate. That said, most brokerages are factoring in that in quarter four, the EBITDA per ton can improve by around $200. And on that increase, they are factoring in that in FY27, it can go up by another $200. Is that possible?
I don't want to speculate on how the profitability will work because, Nigel, there is the LME and there is the cost side. So I think it's fair to say that we are currently running at a 46% EBITDA. And I think that at these levels of LME, it's fair to say that the quarter four EBITDA per ton will be higher than quarter three. I wouldn't want to speculate on the quantum. The fundamental profitability with the LME will continue to go up. Of course, tempered by the fact that cost prices are also starting to show. So I think, some of our inputs like CP coke prices have risen sharply. So I think you'll have to look at the combination of the cost of production and the market. But I think it's fair to say that these high EBITDA per ton that you saw in Q3 are only going to improve in Q4.
Got it. At least directionally, we've got some color on that front. Let's shift to Novelis then. The impact of the fire that you'll be recording for quarter four, will it be higher than quarter three? Point number one. And point number two, I wanted to ask you with regard to this tariffs. Tariffs have had an impact on profitability. But now with the Midwest premium moving up, do you see that tariff impact actually gradually start coming down?
So let's take the Oswego fire incident. I think that, we gave a guidance that the overall cash flow impact would be around 1.3 billion to 1.6. I think that it'd be fair to say that you are going to see a large part of the cash flow impact actually coming in Q4. I think the EBITDA impact in Q4 will be more or less in line with Q3. But I think the good news is that we have now visibility that we'll be starting the mill by middle of Q1. And I think that once that comes back, Novelis US is going to be very good. Now, taking your second question on the tariffs, the tariff impact for us is steadily going down. And as you rightfully said, with the Midwest now running at around $2,200, would be fair to say that going into next year, we should not be seeing any tariff impact at all.
Oh, that's heartening to hear then. So from being a bit of a headwind, it could actually flatten out, which is good news from an investor perspective. Also, you all have repeatedly mentioned that insurance is 70% plus of the total hit that you'll see. Is there any risk to that?
No, I think we are fairly comfortable. We are working very closely with the insurance. They have been involved in Oswego right from the beginning. So we are quite optimistic that we will be able to recover 70 to 80% of the damages.
And Novelis goes to around $500 per ton in the second half of the next fiscal. Possible?
So, Nigel, let me tell you that Q3 itself, if you strip out the effect of Oswego, they were at $495 per ton. So I think underlying profitability of Novelis at around $500 per ton, you should be seeing next year.
Got it. All right. So we've got clarity on that front. What about the copper business? TCRC, came under a little bit of pressure, but you stick to that guidance, 650 crores per quarter for the copper business?
I think that, because of the varied value chain of copper, sulfuric acid prices are good. The rest of the metals that we get, precious metals, those are contributing. Our value-added copper is now slowly coming on stream. The IGT, the inner groove tubes for air conditioners plant, has been commissioned in Baroda. So I think that as a combination of the value-added copper along with sulfuric acid, we are quite confident that even in these low TCRC era, we'll be delivering the 600 to 650 crores a quarter.
Okay. What about the Capex, sir? You had laid out a big 40,000 crores of Capex for the next few years. In the near term, what is that Capex likely to be in FY27, if you could help us out with that? And what does it mean for the net debt number? Because most sell-side notes are talking about that debt number swelling towards 80,000 crores at peak levels.
So I think that the first guidance which we are giving repeatedly is that the consolidated net debt to EBITDA will be around 2. So people don't need to worry because our balance sheet, especially in India, is extremely strong. The second thing is that our Capex cycle is in India. We are steadily going ahead. We will spend 10,000 crores in FY26, and we plan to spend about 12,000 crores in FY27. So we have taken all our Capex spends and our cash flows, and we are quite comfortable that our net debt to EBITDA will be around 2, which is healthy.
All right, that was the management of Hindalco then. Talking about the path ahead, they believe that the global aluminium as well as copper dynamics will continue to support prices, though they highlight that CPC prices are moving up, which is an input cost as well. The markets, though, firmly in the red. We're down closer around 250 points now on the Nifty. Hopefully, by the end of today, we do see a recovery because for the time being, at least, the number of stocks advancing has recovered from the day's low. Take that break, come back, continue to focus on markets as well as stock-specific action. Don't go anywhere.
Welcome back. One day ahead of the Valentine's Day. People call it the kiss day. The only kiss that the market participants perhaps would be at some point waiting for is the kiss between the advance and decline lines. They're far too apart from each other. 2,300 stocks in the red for about 545 stocks in the green. Whether that happens or not, we'll leave it to the team of Trading Hour and the shows beyond that. But Nigel, do you think
don't give any further details?
do you think there's a kiss happening?
They'll get closer to each other.
They'll get closer to each other.
They'll get closer to each other.
Those lines I'm talking about.
Yeah, obviously.
All right. On that note, what we'll do is we'll take your leave. Thank you so much for watching.